In this video, I will be sharing a step-by-step guide to pass any Propfirm test. And after watching this video, you know exactly what steps to take to become a funded trader. I will be talking about long-term profitability, picking the right prop firm, understanding risk, building a plan, and getting funded. By the way, are you enjoying my videos? Then please subscribe so you don't miss anything. All right, so let's get started. Now, before I dive into the topics of today's video, I want to show you some proof, because everyone talks about I passed this prop firm, that prop firm, I trade professionally, this and that. So let me show you the proof. This is my Forex funds, and if you go down here, you can see that I've had this account since the end of March. It's now the half of August, the 15th of August to be precise. So I've had this account for quite some time. I've had multiple payouts with this. So this just proves like I know what I'm talking about. I have had a funded account for some time. Next to that, I also trade for investors here in Holland, and I trade for a small hedge fund. So I have a lot of experience in managing funds, prop firm accounts, those types of things. So I'm not just someone that says, hey, I do this, and then he doesn't do it. So let's go on with the video. Like I said in the beginning, a few things I want to talk about. And if you follow these things step by step, you can pass any prop firm. So let's dive into it. The first topic is long-term profitability. Now, what do I mean by this? Most people focus on challenge. They focus on getting through the challenge, and then they're like, okay, I'm funded, and then they celebrate, and next month they lose the account. That's usually the story with a lot of people. Either they don't pass the challenge, or they pass based on luck. They are putting it on social media like, oh, I passed the prop firm test, this and that, and then they lose the account. That's like everyone's thing. So my advice would be, don't focus on the challenge. You should be focusing on long-term edge, because you don't make money in a challenge. You make money when you have a long-term edge. And that's exactly why most people fail. They fail because when they pass, they don't get through the withdrawal stage because they passed on luck. So the right thing to do is to be a profitable trader for the long term before applying to a test, because you don't want to be the guy that passes on luck, loses the account, does it again and again and again. You want to build a stable career. And if you pick a good prop firm and you have a long-term edge, you're long-term profitable, then it's the right time to apply for a prop firm. So don't focus on the challenge. Don't focus on passing based on luck, because it can almost guarantee that you will lose the account without getting a payout. So let's go to the topic of picking the right prop firm. So step one is being long-term profitable. Step two is like, okay, picking the right prop firm. And what's the right prop firm? It has to fit your trading style. Like if you are a day trader, you don't want to be looking at swing trading prop firms per se, but especially the other way around. If you are a swing trader, you should find a prop firm that fits with swing trading, because most prop firms are based on day traders. And if you are picking a day trading platform, prop firm, then it's really hard to pass. You get rules that don't fit with your style. So first of all, find your style. Like, what is the style that you use to make money in the long term? And then investigate prop firms and pick one that fits with your style. So it comes down to knowing your edge. How long do you hold your trades? What time frames do you use? What's the expected drawdown? What's the expected returns? How much risk can you take? Those are the things you want to know for yourself. And then you want to find a prop firm that fits with that. And you do that by just looking at the rules. You look at the rules and you see, okay, is this something I can work with? For example, I hold trades overnight. And when there's a prop firm that tells me I need to make 10% within 30 days, and I can't hold my trades overnight, it's going to be really, really, really difficult for me.
So then I investigate other options, and step by step you find the right prop firm for you, but it has to fit with you. Like, it's okay if you make small adjustments in your risk management, but you don't want to change your entire strategy just to pass a prop firm, because if you do that, again, your long-term edge is probably not there. You will pass based on luck and you will lose the account. Now, the next overlooked thing is that you want to check the reputation of the prop firm. Reason being is that you get so many new prop firms online. Like, every month you get a couple prop firms opening up. And I can guarantee you that most will be gone in like 3 to 4 to 5 years time. And you want to stick with the ones with good reputation. So, because let's say you get funded by a prop firm that's like, they offer you good terms, etc., etc. You build up the accounts. Yes, you get some payouts, but you're building up. You quit your job and you're relying on their funding. And then you wake up the next day and they're like, oh, we're gone. And then you don't have any funds to trade. Yeah, maybe some funds on your own, but like, you really want to think about a reputation of the prop firm and find one with a good reputation. Stick to the major ones. Even if other ones are offering better terms, usually it comes with higher slippage, bad customer support, those type of things. And of course, they might go away. So focus on finding a prop firm that fits with your style, has a good reputation, and really investigate the rules and see if it fits with your trading. So the next thing is understanding risk. And I wrote down 3 things. So now you know what you need to be looking for, which is long-term edge, and you know how to find the right prop firm. The next thing is understanding risk, guys. Risk rules from the prop firm. You should understand them, because so many people fail because they don't even understand the rules. And that really shows incompetence. It shows they don't take it seriously. It shows these people just gamble, hope for the best. And that's not professional at all. Guaranteed way to lose money. So what should you focus on with risk rules? Let's say you get a 100K account. And the rule is, if you lose 10%, you're out. That means you actually only have a 10K account. And you should be risking based on 10K, not 100K. The 100K is your buying power. It provides you the leverage to open the trades you want to. But essentially, if you lose 10K, you're out. So you're trading a 10K account. And you should make your rules based on that. Like, most people, they risk 2% per trade. And they can only lose 10% in a prop firm challenge. That means they are not risking 2%, but they're risking 20, because if they lose 2%, and that's of 100K, that's 2K, but 2K is 20% of 10K. So they're risking 20% a trade, and like, that's a guaranteed way to blow up. So know the risk rules and be realistic. If you lose 10K, you're out. So risk based on that 10K. Let me show you a quick calculation about this. So on the screen, you see a risk of ruin calculator, and I filled in some statistics. If your average R is 1.3 with a 60% win rate, which is quite decent, and it's like enough to make money for trading as a career. And you risk 20% a trade, like most people do on these prop firms, instead of 2%. There's a 5% chance you're going to blow up. And you might be thinking, only 5% chance. If you keep trading long enough, you will get the 5% chance playing out. It's that simple. Like, if your risk of ruin is 5%, sooner or later you're going to blow up. And even if you pass the prop firm based on luck, using such high risk, when you get funded, like, you will lose the account. That's almost as guaranteed. So that's really something to think about, guys. Like, don't go overboard. And like, let's say you risk 2% a trade and you have a max 10% drawdown. That means if you lose 5 trades in a row, you're out. Now you might be thinking, 5 trades in a row, I never lose 5 trades in a row. Well, let's look at the data. So on the screen, we can see the probability of losing X amount of trades in a row within your next 100 trades. Let's take a look. I'd say most people have a 45% win rate. Look at this. There's a 99% chance that you're going to lose 5 times in a row within your next 100 trades. 99%. So like, it's almost certain it's going to happen. And most people are just not aware of this. And that's something to realize. Like my win rate is between those, and on certain setups is between those two. On average, it's around here. It still is a 40% chance I'm losing 5 times in a row. And this has happened 2 times during the past year that I lost 5 times in a row. Like these things happen and you should be prepared for it. But if you're risking like 2% a trade on a Propfirm challenge, you will fail. And even if you pass, you will lose the account. So take a look at this for yourself. Take a look at, okay, this is my win rate. And then this is what you can expect. And if you don't know your win rate, you have a lot of homework to do. All right, so we've covered the risk of ruin and losing streaks, what to expect. And that's like drawdowns and expected gain. Like if you look back at your performance, what types of drawdown can you expect? How many times have you lost in a row before? How was your biggest drawdown? Those type of things. You want to know the worst case scenario, because the worst case scenario sooner or later will be playing out. You also want to know your expected gain. Like, for example, if you really slow down your risk, like 0.1% a trade, and you need to make 10% gain, that means like you need to make 100 R if you get a 1-to-1 risk reward ratio. So you also need to look at the upside, but start with the downside. That's what most people neglect. So they are like, oh, if I risk 2% a trade and I get a 1-to-5 risk reward, I pass it in one trade. Like that's not the right way to go about it. Look at how you can protect the downside, so preventing to blow up in the long term, and then take a look at, okay, what can I risk to get to the profit target? When you know all these things, it's time to build a plan. So you now know you need a long-term edge before applying. You know how to find the right firm. You know what to look for in terms of risk management. And now it's time to build a plan. You want to incorporate all the risk rules that you should have investigated when you looked at the previous slide. So all the risk rules from the trading firm should be clear, and they should be built in your plan. Okay, if I risk X amount per trade, I have a 0 chance of hitting the max drawdown, and I can pass the challenge. That's what you need to build in your plan. Let it fit with your current trading. Don't try to adjust too much, because then you get away from your edge. And when you get away from your edge, from what you know, the probability of success also declines. So that's also another point to think about. Now, when you're building your plan, please write everything down. And that's really important. Most people are like, oh, it's in my head. It's in my head. But it's not in your head. When money is on the line and when you're like, I need to pass this Propfirm, then it's not in your head and you will get emotional. That's guaranteed. Write it down, guys. Write it down. The last step, getting funded. This is the goal. You should by now know everything that you have to do. Work it out. Like, take a look at every slide and think for yourself, have I done this? Yes or no? If not, do it. Because then when you've done all this, it's only a matter of executing the plan. Don't focusing on passing the challenge based on luck, focusing on long-term edge, keeping the risk controlled, passing the challenge, and scaling up your capital. Like, for example, let's say you get funded and you get a withdrawal of 3K or something. Then with that 3K, maybe you need it for your living to pay for the expenses. But what you can also do is get another challenge or build your own personal account with it. Scale up, scale up, scale up. That's what I want to say. Like, if you have a long-term edge, if it works in the long run, you should be focusing on scaling up. Good luck with everything that I spoke about in this video. If you have questions, comment down below. Subscribe if you liked this video, and then I'll see you next week.